So day to day, guys, welcome back. Welcome back. It's another episode. It's another day. It's a bright day. It's an amazing day. We are here with Jonas inside the boat, the banking edition of the 100 Days in Finance Challenge. You already know. You already know. It's too much time. Too much time. Welcome, Jonas. Welcome, Jonas. Welcome, Jonas. You
Yeah,
already
yeah,
know.
yeah, 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 yeah.
Everybody knows.
I'm here, I'm
It's
here,
too
I'm
much
here.
already.
I'm getting the drift.
Yeah, yeah. So today, like actually, today is an episode for everybody. Like banking for all. So why are you not in the bank? You as a person, are you part of the population? Are you part of the population that's actually outside the banking sector? And why are you not enjoying some of the banking benefits that you could accrue if you are actually having a bank as a partner in the world of finance? As a common mananchi, as a common man like me, like you know, at the end of the day, Jonas is a banker, so he's going to explain to us these things. He's going to explain to us. So we're going to start. We're just going to start right off the bat because this is an exciting episode. So the first question being the general population of the world is 8 billion, but majority of the population are not enjoying the banking, let's say the banking sector, the benefits of the banking sector. So, like, why do close to 2 billion people still lack access to formal banking services? Yeah.
Okay. So I think first things we need to agree that financial inclusion is not a charity, but it is an economic infrastructure, right? So this economic infrastructure has certain barriers that I'm going to talk about. And these are the things that are very, very critical and important for people to understand why the bank doesn't have branches all over or everywhere within the country. So the first challenge that we face from banking perspective is geographical barriers. So geographical barriers speaks to fact that there might be rural communities that are far from physical bank branches. And obviously, when we say rural, you find that
Yeah.
it's small communities where they are maybe 500 or 1,000, depending on the villages, the type of villages around, especially within Africa. That's where the villages and stuff are. I know people in the United States, they call their farm areas countries, I
Yeah.
live in the country and stuff like that. But from a South African perspective, farming areas, it means it's secluded areas that have a very small number of people. These people, due to geographical barriers, are not able to enjoy banking. They are not able to access our physical branches. And that is probably then why the bank is moving away from physical branches to try and
So
accommodate
so
everybody.
it's more like majority of the people are in like rural areas and especially now when you're talking about like our continent. You find our continent has 1 billion people, over 1 billion people. Yeah, but 70%, 70 to 80% of the population still lacks access to banking services and the benefits that accrue to you being in a banking service, especially from a financial perspective, meaning that they're financially illiterate. How can banks how do banks actually bridge that gap
Okay.
in helping?
Yeah, so I will respond to how does the bank maybe probably include these people, right? But I first wanted to share some of the barriers that you're experiencing. So let me
Yeah,
quickly then go through them so that at least we have an idea when we discuss other things. I think another second challenge or barrier that we are facing from a banking perspective is documentation gaps. So, from a South African perspective, people are born in these rural areas. Some don't even have formal identification documents,
Yeah.
or they don't even have proof of address. Because remember, when you open an account, the bank requires proof of address where you are staying. You know, yes, people that are in cities and towns, especially in South Africa, they are probably able to go to a counselor for a counselor of a certain municipality to give them a letter in confirming at which address do they stay, you know. Other
Mm.
than that, if you are in the villages or in the farms, who will you go to? Because farms are secluded, they are far from towns and so forth, you know. So that could be another challenge. And another thing that is very, very important and that we need to consider is the income volatility. Income volatility speaks to um, people earning irregular incomes, and this makes it difficult for traditional underwriting to happen, because if you're where you are staying today, you are earning 100 rand, tomorrow it's 500, another day it's so much, you know. Even when you want to try and access credit, which we were discussing some days ago, you are not able to access credit because your income is fluctuating. You know, your income is not stable. You are paid based on the type of work that you do. So if you have shaved 50 sheep for a specific day, then that's how you'll be paid. And another thing that is also important that we need to consider um, is a trust deficit, in that historical exclusion of systemic inequality can erode confidence in a financial institution. So, how does this then? What does this mean? It means um, there isn't enough trust for people to trust banks by virtue of the distance that they stay or that where they live, right? Because others consider, if I want to go to a bank, I need to pay charges. I mean,
Yeah.
I need to, in order for me to get money. And that's why most people don't even have bank accounts, because they consider, I'm earning 500 rent. And then tomorrow the bank is going to take 50 rent for charges. Why? I want my whole 500 rent. If
Yeah.
the employer gives me my money in my hand, I'm at ease of not having any issues. Going to a bank means charges. Going to a bank means um, I must give the bank something, you know.
Yes.
And due to
Yeah.
that, people end up not taking up any accounts. And that is why a lot of banks are coming to the fourth. Some telling, you are banking, but there are no charges, you know.
Mm.
So there's also banks like Bank Zero in our country, that are also upcoming and so forth. There's your Time Bank that is also upcoming, and these are people who were in traditional banks, and they are moving away from these traditional banks to start other banks where they do consider people that are complaining
Mm.
about charges. So these are the type of things that we face as a bank, and that is why the bank then has different products. you know Banks are trying to include everybody. So they try to copy what M-Pesa is doing by having
Yeah.
those type of products where you can use your cell phone to receive your money. So if I send you 500 rand, you get the whole amount by virtue of using your cell phone to go to the ATM to draw your money. Those are the kind of solutions that banks are trying to create in trying to expand their reach, in trying to make sure that the unbanked are banked.
Yeah.
So in responding to your question with regards to financial inclusion and making sure that we try and include everybody to make sure that they are banked. These are the kind of products that the bank would come up with, you know,
Yeah.
because access to banking requires us that we at least have um, a sort of a capital formation that happens, where savings pulled into the banking systems become funding for loans. So Then the banks decide, we'll make our money from the loans, but for a mere person who is living in the street, let's consider them and try to create a product like M-Pesa
Yeah.
to accommodate those type of people,
Mhm.
And the
So,
challenge, remember now, oh, sorry, let me just finish to say, remember another challenge
mhm.
is that banks don't always have ATMs all over, right? And that is
They
why
don't
you
do.
see banks maybe having a major collaboration with ShopRite to
Yeah.
say, as the supermarket, ShopRite can Standard Bank customers come to your bank to withdraw their
Yeah.
money. Pick and Pay or Woolworths, can customers come to you and withdraw their money to try and move away from charging customers for everything. Yes,
Yeah.
you can continue, my brother.
Uh, Actually, you've actually answered one of the questions that in terms of the inclusive finance and why
Yeah,
it is very important,
yeah,
especially for when you give the perspective of the rural, let's say like the farmer in the rural area, or the casual worker in the rural area, when they get their money just there, there's no way they're going to the bank. Okay, so there's also something that banking for all, in terms of banking for all, that has come up over the recent years thanks to technology, mobile banking, fintech, microloans, crypto. How has this digital, let's say digital technological innovations help the people access services that banks offer to an exclusive clientele to open up to the general public? Like, let's say the way you said on yesterday's episode, fintech offers solutions that maybe banks can't
yeah,
replicate. Yeah.
yeah. So remember to what we are discussing when it comes to mobile money.
Mhm.
M-Pesa on its own, right?
Mhm.
From how it transformed access to cash for
Mhm.
different users. Banks now went and copied something that is closer to M-Pesa, in that you go to FNB, First National Bank, they have what they call e-wallet, right? You go to Standard Bank, they have what we call instant money. NetBank is using M-Pesa. APSA is using what we call cash send. All these things fall, M-Pesa, cash send, instant money, e-wallet. They fall under that category of trying to to include these people. And remember, it makes it easy with this type of products for you to be able to send and receive money via mobile phones. You know, you are able to save small amounts securely. So, what does that mean? I know specifically that e-wallet, when you want to draw funds, it asks you. Let's say I send you 500 rand. I know it asks you, how much do you want to withdraw? Do you want to withdraw the whole amount, or do you want to withdraw a certain portion? So it has that pocket where you are able to save some money, if you want to use it. Because sometimes if you draw the whole amount, then automatically you are at risk of you wanting to use the whole amount at that point in time, right? So
So
that is
yeah.
why then it is important to make sure that uh, in order to save something, with Standard Bank's instant money, it doesn't even ask you. So if you go to the ATM, you put your reference number, the machine automatically gives you your whole amount. But with e-wallet from FNB, you can even buy airtime. If I send you 500 rand, you are able to use your e-wallet to buy airtime. You are able to save
Yeah.
some money there. You are able to take a portion of that money. Same as in Pesa, it works that way. And what does this then mean? It means there is really no traditional bank or branch that is required for this type of a thing, right?
Mhm.
And mobile money bypassed infrastructure limitations and created a digital financial ecosystem for millions of people that did not have access to banks. And this is one way of making sure that the infrastructure part of a financial inclusion, we consider having your M-Pesas, your instant money in place to accommodate those people, So
yeah,
that's very, very critical and important. So to your question with regards to microloans, microfinance institutions try by all means to offer small loans to informal traders, to farmers, to women-led enterprises or first-time
mhm,
entrepreneurs. So I'll make you an example that um, all the banks adopted recently, especially when it comes to first-time entrepreneurs, right? Banks have what we call enterprise uh, development loans. Well, the last time I was in business banking at the time, um, all the big banks started having a loan funding of up to R1 million or up to 1.5 million rand. So if you are a first time entrepreneur and you want to start a business, then banks had this specific department of enterprise development
yeah,
where you could be eligible to qualify for a loan of up to 1.5 million or R1 million. And they do not follow traditional credit checks. We discussed credit checks yesterday. This here with this one, they do not follow that process. If you are young and you come and say, look, I'm trying to start a business here and I need 500,000 or I need 700,000, I believe I would, within this period of time, would have returned your money. Then they look at those type of things, the viability of your business. They check if really your model will be able to work and make you certain profit. If they believe in what you are doing, then they will give you the money without following the traditional credit checks process where every time that you have a if you want to apply for credit, then they follow those checks. Remember, this is ways that the bank is trying by all means to include, you know, small entrepreneurs, people that are still starting, but it's at this small scale that this kind of things are done, you know, from an enterprise development department perspective. So
yeah,
um, if people can utilize this type of a product as first-time entrepreneurs, they stand a good chance of growing, from being small to medium and to larger enterprises in the future.
yeah,
So for informal traders, uh, banks are also starting to have like small loans.
yeah,
I'll make you an example of people that are probably in the selling business. They sell potatoes, they sell this or that. The banks are trying to accommodate these people as well in a sense of being informal and you are selling potatoes. We can see that you've been selling for the past 3 months. You are making 2, 3 thousand rand. So based on that, let's see then how can we support you with a small loan so that you have enough stock or so that you have a fridge of some sort that will make sure that your potatoes stay fresh if you have to put them in a fridge or whatever device that you would need to make sure your product doesn't rot and go to waste. And based on this, then that's how banks are also building this type of relationships through micro loans, at a smaller scale, obviously, given the
yeah,
risk and so forth, because they also don't want to have high losses, for in case you are not able to pay. And that is the type of things that banks have put in place. And yeah, you spoke also about blockchain technology,
yeah.
which
That's
can really
actually what I was
provide,
saying.
yeah, which can also provide secure digital identities for each and every client. And there's blockchains also, remember, they enable low cost cross border transfers. So using M-Pesa, I can be able to send you money that side, and there's no remittance fees that you would pay if that is then how we are going to do what we are going to do. And These blockchains also create transparent transaction histories for us to see the type of relationship we have in a sense of the money that is being sent from here to Kenya and from Kenya to South Africa. So for the unbanked, blockchains offer access without traditional intermediaries. So there aren't any lot of charges that you find yourself having to pay. There aren't any exchange rates that you find yourself having to pay, given you being in Kenya and me being here. But we are trying by all means to make sure that this type of transactions are done in a way that will accommodate the unbanked, will accommodate people that cannot afford the bank charges, because it's not like the bank charges are cheap. Yeah, it's not like, and
Yeah,
that is why banks are going to as far as creating certain products where customers are charged less, because in fact, that's why I'm saying that's how then Bank Zero came, or was created, because they felt with Bank Zero, if you are a customer there, you pay zero bank charges. You know?
I
And these are the
think I
type of
think
things.
I think the there should be an actual definition of like who exactly is a bank. Majority of people think that the unbanked are just people in the rural areas, but you find even a vast majority of people in urban areas are also unbanked. I think that's why this, when I think about it, even these solutions themselves presented them actually came from a need from people in urban areas, like let's say mobile money.
Mm.
There's like M-Pesa, microloans accrue to more like people in the rural areas, but something like crypto, that's for the people in the urban areas, because you
Yeah.
find now you don't want to go to the bank. I can bank everything I want in crypto, and also like I can send. Let's say like I'm sending to Jonas and a couple of other people in South Africa. It happens in a span of seconds, whereas in banks it will take days. I think I think some of the solutions that came. That's actually one of the things I was thinking about.
Yeah. You see, with crypto, it makes life easy. And that's why I'm saying, uh, because of the blockchain type of access, you find that traditional intermediaries are not there. So you can't be charged
Yeah,
foreign exchange charges. You can't be charged any extra charges in even converting your money from rand um, to your currency,
okay,
or from
yeah,
rand to dollar and stuff like that. So that's how then crypto assists. Yes, we are on a journey from a banking perspective, in a sense of making sure that even the devices that we are creating are able to address that. But from a banking perspective, remember, on a larger scale, banks would still want to make money in a certain way, and that is why we are gradually moving towards blockchain technology, where some things can happen instantly, like we would want, in a sense of making sure that transactions don't have any exchange rates and so forth in place. But it's a journey on its own from a banking perspective, given that the banks wills, take time
yeah,
to
to understand.
to turn, but it will eventually turn. You know?
But the bureaucracy around surrounding banks is amazing because
Yeah,
it's a very rigid system. Before you find something
yeah.
to change, it becomes a, so maybe one the last question: how how do you see the future, especially the future of tech, bridging this gap between traditional banking and the unbanked? Is there any paradigm shift that you're seeing? Give us your perspective on how. this gap now will be closed?
Yeah, so I think, look, I think for me it is important, right? Remember, banks currently, especially in South Africa, banks are currently working with Department of Home Affairs from the government perspective, right? In a sense of making sure that you can now go to a bank to apply for an identity document, something that you couldn't do before. Right?
Couldn't do before.
So, secondly, Department of Home Affairs and banks are working together and have collaborated in that when we open an account for you, our system is connected to Department of Home Affairs. We can immediately check if you exist or not. We can immediately check if you are fraud or not, right? So what am I saying? I think it is important that we use technology to bridge the digital identity systems that we already have. You know how the the banks need to move to using biometric registrations because this then eliminates documentation barriers. So what does that mean? It should be easy to go to a bank and just with your finger because it's on record at Department of Home Affairs, even at the bank. So if you just put your finger on a banking system to say, hi, I'm Jung, and can I draw money on my account? If you put your finger there, they should be able to give you your money without even producing a document. I think that's how far we want to go with this. Secondly, I think it's important for technology to bridge the gap in a sense of having alternative credit scoring. So your mobile payment history should and utility payments can also substitute traditional credit records. Remember, we spoke about FICO that has a system of having retail accounts, but mobile payment history should also be included. I think that is
Yeah.
important because obviously not everybody is banked. Some people, when you are unbanked, it simply means you don't have a physical bank account where you can say you are a customer. But by virtue of being sent money via M-Pesa, those transactions should also be counted as a way for you to improve your score. I think that's the future and that's where we want to go. And the bank should also consider low cost digital wallets. You know, some wallets, when you are sent 500 rand, then they draw 2 rand or 5 rand. I mean, we should make digital wallets less costly as possible. You know, we should
Yeah.
try to make sure that we accommodate our customers to that level. I think that is important. And another thing that is important is we need to consider agent banking models. Agent banking model speaks to local shopkeepers acting as a financial service point in rural areas. Remember, I said ShopRite is currently doing that. So you can go to ShopRite, but the banks should consider even uh, tuck shops. I don't know what you call tuck shops in your country. Tuck shop is a person, is you having a small supermarket, just small, not
Yeah.
very big. Yeah, those
Like the
kind of
ones in the
stores.
petrol station. Like those
Sorry,
ones that you usually get in petrol station.
small ones where people can still buy small groceries, at a smaller scale. So it's not a big supermarket. It's probably very small, but those type of small stores, they should also be given an opportunity, to assist
Yeah.
customers to draw cash from there, because you might see villages might also be far from ShopRite. People must still travel. It's like traveling 200 kilometers to go to a bank. So these small tax shops, if they are considered to also assist in that way, we will eliminate a lot of having people that are unbanked because at least they will go to Freddy's supermarket or Jonas supermarket and still get the type of service they require and that they need, to be able to get cash.
Thank you so much, Jonas. I think I think majority of these topics they really can't be covered just by one session
Yeah,
because this especially when you consider that 70 to 80%, 70 to 80% of the African population lack any kind of financial knowledge
yeah.
apart from maybe the one that are taught in school. Give to the church 10% or something like that. So it's
Yeah, yeah, no,
that's not
definitely.
only what they know. So like it'll be a great opportunity to continue this conversation. Thank you so much for your time. That's all the time that we have, guys, for today. You know, Jonas has a lot of things to do. So anytime he gives us his time, it's amazing. It's amazing. Any last words, Jonas, before you leave?
Look, we from banking perspective, we are really on a trajectory of making sure that all the people receive an opportunity to be included in our economy, and the wheel is turning. And whether people are for it or against it, technology is rapidly taking over our lives. So it's important that we align ourselves accordingly. You don't need to have a smartphone. Even with your small little phone, you can still be able to transact on your phone. It's just a matter of pressing star 120 star 234 hash, and then you will receive your money. And people, I understand the challenges of fear of technology, but let's try by all means to make sure that we try and accommodate the changes that are happening, because one of these days we might find ourselves not having a physical person in a bank, and that is a journey that the banks are taking, you know. And bank zeros and time banks are the typical